Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. I am in Grand Island, Nebraska on the Nebraska State Fairgrounds because the Junior Angus Nationals are taking place this whole week. Some amazing, beautiful cattle that are moving through the show rings, and an opportunity from kids all across the nation to do some showcasing of their projects and their families' projects as well. And of course, no surprise, everybody's talking about what's going on in the cattle market on a Wednesday as we do this report. And as you can see, Brad Kooima is joining us. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. And an interesting week. Now, the rally of last week may have been a bit overdone, but markets being highly influenced by the corn market. And Brad, I think that's a lot of conversation we continue to have on repeat. What's going on in the corn and how is it going to affect our trade?
Yeah, for sure. Ad nauseum, in fact, right? Thanks for having me on, Susan. I enjoy this. I thought particularly and especially last Friday, of course, unless you've been on Mars, you probably heard that there was a report and the acreage number were grossly missed on both sides. Much bigger on the corn than expected and much smaller on the bean acre as well. The corn basically is down $1.35 a bushel from 9 days ago. Well, that impacts feeder cattle. And when feeder cattle go crazy like they did Friday, that does impact live cattle futures as well. So I thought maybe today was more of a tempering of that, maybe a leveling out. I don't think any cattleman would ever say it was too strong. So don't get me, don't want to be misunderstood here. I'm for us, right? But I think, a couple of things that I think is we're dealing with here. One would be the fact that the funds have had a huge long position in the cattle here, bigger than they've been in a long time. Okay. Well, so you don't get into those positions in a day, and nor do you get out of them in a day. So as we move ahead here to the fund roll, there's going to be at least a fair amount of selling of August and buying probably October, maybe December, or maybe they just liquidate. We'll see what some of those funds will do. So I think that there's a little risk here in the front end of the market. Obviously, the other thing is if the corn would decide to go crazy again, that'll be an impact. But it is the 5th of July. And while I remember a year or two where we've rallied in July, it is the outlier. Okay. It would be more normal to slow down the beef feature, go to something cheaper, get into more calves. The supply increases as you get more northern calves fat. So, I have a tendency just to be a little bit cautious here for a moment, Susan, I guess is the way I would describe it.
So how long can you be cautious before we start to see things pick up again for these cattle?
Well, Friday, I was afraid I had waited too long already. It was like, I thought that if we got to let's see, I think the 12th of July is the third day of the Goldman roll. I guess I got that kind of put a star on the calendar for my own thinking. If it was that easy, everybody would do it. I don't mean to imply that it is, but so somewhere in mid-July, this is what I'm wondering. And it's this. So I feed cattle, okay? And for fun, we were doing a little calculation today because there's a lot of people that want to sell cattle out front, 30 days, 45 days, whatever. So we started to calculate how much less you can take and put that weight on when you're getting $1.80 or $1.81 or $2, $3, $4, $5, whatever you're getting, and still be money ahead because corn's cheaper. Okay. Mm-hmm. And I bring it up because I think that's a dynamic that I think is important because we got to keep an eye on that because that's part of what went wrong in 2015, where we decided let's make these cattle bigger. And so, but if you think about it, and I'm speculating here, but if you think about it, if that gives you a holding action during August because, it's going to go higher. October's a $3 premium to August futures. And the corn's cheaper. Heck, it's time for me to make some real money here. Let's make these cattle bigger. And then you lose your leverage. So I'm not saying we're going to do that, but that's something that I'm going to watch very, very carefully as a signal that maybe it's time to get off the bullish bus here for a second. But I'm not off it. I think, we get through this next little period, got a lot less cattle. But it's my job to try to watch this stuff. So that's what I'm watching for. What can go wrong, right?
And you're going to be watching what's going on in August too with this fund rolling.
Well, for sure. Today made sense to me that August would lose some ground to the other months, Susan. And, maybe a few more days of that, get to the 12th, 15th of the month and something like that. And then we'll take a look. And maybe that spread will have changed by then. But when October's carrying enough of a premium to incentivize you to feed them, that's the thing we got to, I think, be a little bit careful about.
So how is the cost of gain right now as you look at the big picture?
Well, I just had 3 closeouts today. Is it funny you bring it up? It depends on, how the performance is and stuff like that. But, lately I've had cost of gain as good as $1.05 and as high as $1.25. Earlier this year, I had them as bad as $1.60 and $1.70 on poor performance, and when corn was $7.80. So it's significantly different. It's curious to me when you look at sale barns, video auctions, and stuff like that. I guess I'm wondering what those guys are figuring their cost of gain is going to be. Feeder cattle are higher than the draft's dentist. Everybody knows that. Good for the guy that's raising them. He deserves to make some money, but they're certainly at historically high levels.
Any concerns about weights right now?
No, right now we're fine. I just checked through the weights here. We had a little bit of an uptick after last week, but nothing bad. Still behind pace of what 2014 was like, if you can imagine, because that was a year we were hypercurrent as well. And we're slower to turn up on the weights even this year than we were that year. So it's still very encouraging out there.
And Kansas looks like kind of the hot spot when it comes to any sort of bid opportunities this week.
It's about the only place there's any action today. I heard majors at 178, and I did hear of a regional that paid some of the kind of cattle that they like to ship to Nebraska for 181, so that's fully steady. And I think the view here would be that we'd be generally steady. It's weird. We got an awful lot of guys that are trying to price cattle out front. That's not my jam. I like to sell them and have them pick them up, ideally within a week, but 14 days at most. I understand people do what they have to do. Right now, we still have a fair amount of leverage, it feels to me like, Susan.
So you talked about last week and what you saw on Friday, do you think overall this rally was just overdone?
Well, yeah, and I love it when it rallies, don't get me wrong, but I thought that, throwing $2.50 on August and $5 on feeder cattle, and I get it, corn was down the limit, right? I mean, but that's a big change, and at a time of year where you don't really look for it. And what the other thing is, we did, well, at least for a few minutes there, we had convergence with the South at 178 and the August cattle right up against it. So this argument that you and I've talked about for months, it feels like, is that, well, the futures are a pretty big discount. Well, not so much anymore, and probably more of a normal basis almost here, believe it or not. So we'll see from here. I just think at these levels, one needs to be just a little bit cautious. I don't want to be Debbie Downer, but be careful.
All right, it was a shortened week. What can we expect the rest of this week as we head into next week's full week of trade?
Well, the rule of thumb used to be you'd have a little better cash trade on a short for a long. There was a big kill today. I noticed 128, box beef up another $2. It would still seem like, at least for now, the Packers willing to keep blood on the floor and stay aggressive. So I would guess that cash would be steady up. And I don't know, to me, futures would still have a little risk that the front end would sag just a little bit more from here.
All right, we talked about some great stuff today. Somebody wants to have further conversation when it comes to these cattle. How do they reach you?
Hey, look us up, kkvtrading.com would be a good spot to start.
All right. Thanks, Brad, for joining us.
Thanks.
Brad Kooima has been joining us as I am at the Angus Junior Nationals taking place in Grand Island. That's this week's cattle call. And as we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the cattle call on the Rural Radio Network.